Hi everybody, this is Mike and this is the next webinar in the Your Money, Your Goals series, Module 3. This is the webinar that was originally scheduled for next week on February 28th. However, if you listen to my webinar from last month, I explained that I worked from home and I was having some issues with ongoing internet connectivity problems. And unfortunately, those are still occurring. I had CenturyLink come out on Friday, thought the issue was fixed. It was okay during the weekend, but it went down again on me this morning. So instead of taking chances on internet connectivity problems during the live webinar, I'm going to go ahead and pre-record this like I did the last one, just so that we could stay on schedule with the webinar. So I have a couple of announcements for those of you who are listening in before we get started. If you are a DARS counselor and you would like CRC credit for your participation in listening to this webinar, those are available. If that's something you're interested in, please send me an email at Michael, M-I-C-H-A-E-L .klinger, K-L-I-N-G-E-R @dars.virginia.gov, and I will make sure those credits get logged in for you. If you are a WISA and you are listening to this, you can count your participation in this webinar as part of your continuing ed credits if you are certified through Cornell. If you have any questions about how to access your portal or log in your credits, you can email Ray Sabula's assistant, Michelle Elverord, at msa224@cornell.edu, and Michelle can walk you through logging in those credits. So this is Module 3 of the Your Money, Your Goals Toolkit. Module 1 was on paying for large purchases and assistive technology. Module 2 was on saving for emergencies, bills, and expenses. And Module 3 is on tracking income and benefits. And that's what we're going to talk about a little bit today. And like I've done with the previous webinars, I just wanted to start out by going through a sample case study, because I like practical examples to show you guys who are listening in how you can apply the concepts in the Your Money, Your Goals toolkit to an actual case. So let's just start off by going through the sample case study, and then I'll go through some of the tools with you that are in the toolkit on this module. So the sample case study says that James is an 18-year-old with cerebral palsy. He receives $750 a month in SSI, which is the standard rate for individuals living alone in 2018. He recently became his own payee and has moved into his own apartment. The rent is subsidized based on his income. He's currently working with DARS on job placement and is looking for part-time work to start. While he's excited about the opportunity to be independent, he's also apprehensive about managing his own money and paying his own bills. This would be the first time he's been responsible to do that. His DARS counselor has authorized a work world analysis, which will show him how his disposable income will change when he goes to work. Because of this income change, he will have the opportunity to increase his savings and have more money to work with at the end of the month once he pays his bills. How can we use the tools in the Your Money, Your Goals toolkit to help James keep track of his income and benefits that he has coming in? So in this scenario, you have a young kid, only 18 years old, who has just become his own payee. And for those of you that aren't as familiar with what a payee is somebody other than a beneficiary who receives SSI or SSDI that's responsible for managing that person's money for them and paying their expenses if the person is not capable of it. It can either be a family member, like a parent, or other relative. It could be a friend, anybody that would be trustworthy to manage the benefits that the person has on their behalf. So if a client is under the age of 18 and has been receiving like SSI benefits as a minor, the parents are always the payee, assuming they have parents. A client is not eligible to manage their own money until they turn 18. So James has just turned 18. He's become his own payee for the first time. So he's responsible for managing his benefits and paying his bills on his own for the first time. Obviously, he's got some apprehension about that, and he comes to the WISA, who's doing the work world analysis, for some advice on how to track those benefits that he has coming in. Going to talk a little bit about some strategies that the Your Money, Your Goals toolkit has developed to help a client do that. And I left a couple of the points from the last case study from Module 2 in here because they apply. So he's a 18-year-old and he's on SSI. Didn't mention if he's a student in the case study, but if he is, could he use like the student earned income exclusion or a pass or an able account to maximize the SSI benefits he has coming in? He's a young kid who has the opportunity to save for the first time. He's under the age of 26, so obviously his disability was onset before age 26. He's on SSI. Maybe he wants to save more money than the $2,000 resource limit allows. Maybe an able account would be beneficial for him to build some savings. Like I said, I didn't put in the case study that he's a student, but if he was, maybe he could use something like the SEIE to maximize his SSI benefits for a time, and any part-time job that he works wouldn't impact his benefits for a time. So these are kind of things that would impact his ability to save. He would be able to put more money aside into an able account, obviously, and he would have more money to put aside if he was using the SEIE than he would if he didn't have those things available to him. So we want to put that down on the income tracker. So what I wanted to do was go through some of the tools in the Your Money, Your Goals toolkit. And I wanted to start with the first one from the Focus for People with Disabilities guide. And this is a worksheet that you could use as a service provider with a client to help a client keep track of all the income they have coming in for the month, whether they get SSI benefits or SSDI benefits or SNAP benefits, or whether or not they're working or receiving any other unearned income like child support. Anything that they have coming in can be tracked on this worksheet to help a client keep track of their monthly budget, both to develop a budget and keep track of what they have coming in. So there's a couple tips here that the Your Money, Your Goals folks have given you. So it just says, very simply, write the names of any income and benefits that apply, fill in the amounts that you receive each week, total up the week's income, and then circle the payments that come in at a predictable time and amount. This will show you the income you can count on each month. Well, we said the client is on SSI. We know that the SSI payments come in on the first of every month. So on the benefit tracker, what the service provider could do is put down that you get $750 once a month, first of the month, and circle it. The client knows that every month he can depend on that $750 coming in to pay his expenses. So what this does is gives you several different categories of income where the client may have income coming from. So whether they have a job, they can put the amount that they get either paid weekly or biweekly or however they're paid there by week. The government program, if they're on things like TANF or SNAP, the amount would go in there. Disability benefits is where a client could list any SSI or any SSDI benefits that they receive and the amount. Like, for example, in this case, we said the client was on SSI of $750. You would put disability benefits in week 1 because they're paid on the first of the month. You would put $750 for week 1 there. Any other financial support that they get, either in the form of maybe contributions from a family member or friend to help them out, anything like that would go in there. And then there's some spots for additional expenses that aren't listed on the tracking worksheet for income that they might have from other sources that are coming in that you can put there. And then you would total up the weekly totals and then come up with a amount for the month. So a very simple, straightforward tool that a client can use to keep track of what they have coming in every month. Next tool is really important for people who are on SSI, like our client is in this case study here. It's the SSI income estimator, and basically what it is it's basically an example of a SSI calculation worksheet. And those of you who are WISs particularly are going to be familiar with this. But basically what it does is gives the client an opportunity to fill in what they're making per month, and then it goes to the SSI standard calculation formula that we're used to. So even though those of you who are on the line probably know how to do this, let's just take a quick example. Let's say the client gets a job making $1,085 a month. We said that the client was working with DARS on trying to find a part-time job, so we'll just say client's working now making $1,085 a month and is not a student, so is not utilizing the social or the SEIE. So standard formula applies. You would put 1085 there in the first column, minus 85. That's the earned income exclusion of 65 plus the $20 general income exclusion. So that's 1,000. So 1,000 would go into column C. And then, of course, you divide that number in half. Which is 500. So the amount that will be taken from the SSI is $500 a month. That's the countable income out of his 1085. In the next section, you calculate the new SSI amount, and this says 735 because at the time that the toolkit was put together, 735 was the maximum SSI payment amount, so that would need to change. But obviously, the new payment amount is 750, so you want to change 735 to 750 in column F, minus 500 in countable earnings is $250. So that would be his new SSI check if he went to work earning $1,085 a month. And you'll notice that this worksheet has kept it very simplistic and just did the basic formula. It doesn't take into account like unearned income or any work expenses or work incentives the client might be utilizing, like IRWE or BWE or any of the standard ones that would be on an SSI calculation sheet. This is just a very basic breakdown of how the earned income calculation works. But then in the next section, you would calculate how much money the client has coming in now that they work. So the amount they earn from work each month is $1,050. And then they also have $250 still coming in from the SSI check. So they have roughly $1,300 a month coming in. So that's what the client's financial picture would look like working at $1,085 a month, no work incentives. All right, so obviously you can use this tool in addition to the work-load analysis that you would do with the client to show them that, hey, even though your SSI goes down a little bit when you're working, overall you have much more money coming in than you did just on benefits at $750 a month alone. So basic breakdown. Like I said, those of you on the line already know how to calculate a check, but just thought I would go through it anyway because it is a tool that you can use to help simplify with clients how the calculation works. Next tool I wanted to go through was a tool, and this is in the Your Money, Your Goals toolkit on Ways to receive your income and benefits, and it's just subtitled Know Your Options. And this just is a chart that you can use with a client to go through some of the ways they might be able to receive their money and help them weigh the pros and cons of each. So let's just go through some of them. So obviously, in some circumstances, a client might have the option of being paid in cash. Now, a lot of the time now, when you're talking about income from a job or federal benefits, that's not an option, but sometimes clients may receive that. So what's the benefit of cash? Obviously, it's accepted everywhere. Risks could be lost or stolen. Some people might be tempted to spend it if they have cash on hand. It might burn a hole in their pocket, and instead of that money going into a savings plan or being used to pay their bills, they might be tempted to spend it if they just have it laying around. It might be more difficult to track for spending and budgeting purposes because, as you could see in the income tracker up above, there wasn't really a column for cash payments received. It was like income from a job, federal benefits, that sort of stuff. There wasn't really a column for cash. So, if somebody gets $20 here and there in the form of cash, that might not go on their income and spending tracker, just because they might just get it and spend it. So that's income that they have coming in that might help pay their bills but not be reflected in terms of that. And obviously, one of the risks is that not all bill payments can be made in cash. And these days, a lot of things are done electronically online in terms of bill pay, whether it's utility bills or car payments or credit cards or student loans or whatever it is. A lot of those expenses are paid online now and don't necessarily have a cash option. You see there's a little box there that the client can check. If they feel like cash is the best option for them, they can check that little box. Obviously, another option is a paper check. So paper check can be used for those that get income from a job. What are the benefits? Obviously, income can be deposited into a checking or savings account or a prepaid card. So the cash isn't laying around the house to tempt the person to spend it. It is going into a savings account. One of the benefits is that even if a client doesn't have a savings account, if they cash it at the same bank the check is drawn out, they might be able to cash it without having to pay a fee. But the risks are that sometimes if a client cashes a check at another financial institution than the one that the check's drawn on and they don't have an account at that bank or credit union, then they might have to pay a fee for the check cashing. And so they're not really getting all their money if they're getting it in the form of a check. Also, one of the risks of doing it that way is that if it's a check, especially if it's a substantial check, the money might not be available right away. So the client might need money ASAP. They put it in the bank, and it might take 2 to 3 business days for the check to clear, and there could be delays for weekends or holidays or whatever. So the client might not have the money as soon as they need it if they were to do it that way. But again, if a client wants to do the paper check, there's a little box that says paper check is an option that works for me. Direct deposit is obviously one of the most common options now and probably the most popular ones. But Social Security has moved into this method. Instead of issuing paper checks, they stopped that a lot of years ago. Where if somebody's on SSI or SSDI, the direct deposit options are either the client either gets it in the bank account or on like a prepaid debit card. Their SSI, SSDI goes right into their checking account direct deposit or on that card. A lot of people are doing that for their paychecks now. I know DARS only has a direct deposit option. We don't get paid via a paper check. Everything is electronic, and I think a lot of companies are moving that way now. But what are the benefits? It reduces the risk of theft compared to carrying cash or checks. Clients don't have to worry about misplacing the funds or being taken advantage of. Funds are usually available to you immediately. And that's true with a lot of direct deposits, even when a person's paycheck or government benefits are deposited, even if it says pending on their online banking, those funds are still available pretty much immediately, even though the deposit hasn't cleared yet. Obviously, there's no check cashing fee, so the client gets all of their benefits or all their paycheck without having to pay for check cashing fees and things like that. Many banks and credit unions offer checking and savings accounts with no fees when you set up direct deposit. So if a client has a SSI or SSDI check or paycheck going into that account, they can have their checking or savings account for free. The funds can be accessed simply with an ATM card, with a personal checking account, or by personal checks. And then the money that's deposited into a bank or credit union in the form of direct deposit is protected under the Consumer Financial Protection Bureau. So if something happens where a bank is robbed or something, then the person's money can be replaced because it is protected under the Consumer Financial Protection Bureau. Whereas having cash on hand or a paper check that they cash and have the cash on hand might not have those same sorts of protections. Another big benefit is that it may allow an employer to split the deposit between checking and savings accounts, which can help a client build savings. Now, this is particularly a big benefit for somebody that's maybe on a needs-based benefit like SSI and wants to develop an ABLE account to save more money than the $2,000 resource limit. Obviously, ABLE accounts have to be separate accounts than the money that the client uses to pay all their other expenses. So what the client has the ability to do is maybe have the ABLE account set up and then tell their HR department that every week or every 2 weeks or however they get paid, they want to have maybe $100 or $200 of that payment put directly into their ABLE account. So it gets the client in a habit of automatic savings. The $100 to $200 a month of their income goes right into that ABLE account and allows them to easily and safely save towards the disability-related expenses they're going to use their account for. One of the risks, not really a risk, but kind of a drawback, is that obviously the client doesn't have the actual cash on hand. So if they want to go withdraw the cash, they actually have to physically go to the ATM and get it out. That might be difficult if somebody has a mobility impairment and doesn't really have the ability to get around that easily or that well. So another risk is that the bank can charge a fee if you write checks or use debit card without sufficient funds. If the client doesn't have something like overdraft protection and they're trying to withdraw more money or write a check for more money than what they have in the bank, that could be a problem with like overdrawn fees and overdraft fees and stuff. So That's one of the risks that a person has by having an account. There's a tip there that says ask your employer how to arrange for direct deposit. A lot of times that'll be set up right away when a client is hired. The HR department will work with the client directly to set it up at the time they accept a job. It says if you receive your pay through direct deposit, the money is often available on payday. Beware of ATM fees you may be charged. Generally, you can avoid these fees if you use the ATM at your own bank. Usually the ATM fees are only charged if a client tries to withdraw the money at another institution. So, for example, if they banked with BB&T and went to a BB&T ATM to withdraw money, they wouldn't have to pay a fee. But if they went to, let's say, a convenience store and used one of the ATMs there, there's often a surcharge. Or if they went to another bank like SunTrust, there might be a surcharge because the client doesn't have an account there. Okay, another option is payroll and benefit card. And I mentioned this a minute ago when I was talking about people who are on government benefits such as SSI and SSDI. So Social Security stopped issuing paper checks a long time ago. The client either has the option of doing a direct deposit into a checking or savings account, or their benefits would be put on a prepaid card, kind of like a prepaid debit card. So if somebody was on SSI, for example, their benefits are $750 a month. If they didn't have a bank account or didn't want the money put into the bank account, they can be put on a prepaid debit card. They would have $750 put on there, and then they could use that card anywhere where a debit card is accepted. So like if it was a Visa prepaid card where their SSI went on, they could use it at the grocery store, at the gas station, to pay bills, whatever. And they could use that up until their $750 and SSI benefits was depleted, and then the card would no longer work. So the money just goes on the card as a prepaid debit card, and then the client uses it as needed until the funds are depleted. So the payroll card is a prepaid card arranged through the employer. Not a lot of employers are doing that. I believe a lot of them are moving the direct deposit route. But if a client does work for a agency that does the prepaid payroll card, that's an option for them, obviously. And these cards do have protection if the funds on the card are somehow taken in error, or if they get taken advantage of, except for funds issued for guards, except for government issued cards for needs tested benefits. That could be like an EBT card, like if somebody was on food stamps or SNAP and somebody got a hold of their food stamp card and used it, then the client might not have any protections, because how do you prove to social services that the client didn't use the benefits themselves and those benefits were taken? So if it's like a payroll check, it's covered by the CFPB's protections, but if it's a government benefit, it's not. What are the risks? So obviously the client would have to go to the ATM to withdraw the cash. Potential inactivity and service fees. You may face fees to get full access to your wages. For example, there could be some fees associated with using the card. So again, like with the check cashing, the client might not get all the benefits that they're entitled to because they have fees associated with using that card. Obviously, not all merchants accept the EBT cards. So like if a client was on a needs-based benefit like food stamps and they had the benefits put on the card, some of the smaller mom and pop stores might not use that or accept that card, so they would have to go elsewhere to purchase their food. And again, cards for needs-based benefits lack full protections against theft and being taken advantage of, unfortunately. So in terms of convenience, having a government benefit put on a prepaid card or your paycheck being put on a prepaid payroll card, in terms of convenience, it's nice, but it doesn't necessarily allow the client the conveniences or the protections of maybe just having a direct deposit where their deposits are insured against theft. And again, one of the risks for the EBT cards is that just like an SSI check or an SSDI check, for a client that has the prepaid debit card, the EBT benefits go onto a, uh, a prepaid card that they could use as a debit card when they go to a store that accepts EBT. But after a while, if the client doesn't use those EBT benefits, some of those benefits can be lost. I don't remember exactly how long a client can accumulate their monthly benefits. I think it might be no more than 6 months. Eventually, if they don't use them, then those benefits can be lost. So having EBT card isn't maybe the best way to accumulate benefits because you can't really save them for a future date because you run the risk of losing them. So very simple chart, um, but it does help you just compare with clients the different ways that they can receive their money and how they're going to use it, and some of the benefits and drawbacks of each. Last tool that I wanted to talk about in Module 3 is entitled Ways to Increase Income and Resources. And this is talking about ways to increase your income not only by going to work, obviously, and getting a job, but other ways to bring in income like a one-time activity like a garage sale or online auction like eBay. People might have one-time payments that are coming for the sale of merchandise that they can include in their budget for the month. Things that only happen maybe once a year, like an income tax return um, that they can put aside into a savings. These are all ways to increase income and resources. What I found interesting about this tool is that it talks about the workforce development programs and how some of those programs can help people with disabilities find jobs. And not necessarily that a client has to have a disability, but often, agencies like DARS that help people with disabilities find jobs do work with some of these programs. And I just thought it was interesting to have this in the Your Money, Your Goals toolkit as ways and resources for people to access services to help them find work. And it just gives a little bit of a breakdown on what a workforce development program is. And this is one way to potentially increase income for the long term is to use the local workforce development program to provide skills training that can prepare you for jobs where you work now or another company or organization offered through vocational schools, career tech schools, community college, universities, other apprenticeship programs. So often, one of the things that DARS does is obviously job retraining. Sometimes a client cannot do the same paperwork they used to do before they became disabled, and they need to be retrained for a different type of career. And we can link them up with workforce development services to help a client get the training they need to work in a different career that would both accommodate their disability and allow them to work in an area of their interest. And so it says, how do you find these programs? And it gives you a link to the Department of Labor website. and the click feature is not going to work, but I'm just going to copy and paste into my web browser, and we'll see what comes up. All right, so the link works from the Your Money, Your Goals Toolkit, and there's a couple different ways to search for the different programs in your area. Either you can click on the state map, or you can browse by zip code. And I'm just going to put in my zip code 23930, and we'll see what comes up in terms of services. And that brings you to the Career One-Stop Centers. And you can search your location within 25 miles all the way up to 100 miles. Let's say if there's one near me, 23930, search. And I live in a very rural area, so it says there's not one near me, but let's expand it a little bit more, 50 miles. See what comes up then. Okay, so there you go. Let me maximize this so you can see. So, like I said, I live in a very rural area, so there's not much out here. But as you're going a little bit farther out towards like Charlotte Courthouse, Chesterfield, Richmond, 50 miles from me, there's different options for different services. And the Career One-Stop Centers can help people with things like developing a resume, working on their interviewing skills, doing mock interviews, that sort of stuff to prepare them for an actual job interview. So these are really valuable resources for a client to have, and I just found it interesting that the Your Money, Your Goals Toolkit had a link to all these resources. If you are a VR counselor and you're using the Your Money, Your Goals Toolkit with clients, this is a good way for you to kind of put the responsibility back on them to help with their job search, where they can actually go online and put in their zip code and find the resources that are closest to them that could help them with, like I said, resume building, interview skills, that sort of stuff. So you can actually use the tools in the toolkit to help make the client more accountable in terms of locating some of their own services rather than you having to do all the work. And I think that was it for the tools. This is just deciding on when to claim Social Security benefits. And there's one more part where a person can use this tool to keep track of some of the things they've done to bring in some extra money. So, like, for example, holding a yard sale or selling items online like eBay, tax credits if you qualify. Did they use something like the Earned Income Tax Credit to increase their tax refund or other? How are some ways to increase regular income? What strategies might a client take to increase income they have coming on a regular basis? Have they maybe seek or a raise or get additional hours at their job, change their tax withholding? Like if they were, for example, maybe claiming one themselves on their taxes, they could maybe claim 0 for the year and have more taken out. That would allow them to get more of a refund at the end of the year, maybe supplementing the income they have coming in by getting a part-time job or doing odd jobs, or maybe apply for any benefits that they're eligible for, like TANF, SNAP, Medicaid, public housing, SSI, or employment. All right, so let's take that one. for an example of how a WISA or a VR counselor might be able to use this tool with somebody. So those of you who are familiar with the SSI and Medicaid rules know that Virginia is a 209B state, meaning that people who are on SSI are eligible for Medicaid, but they're not automatically eligible for it when they get SSI like they are in some states. In Virginia, it requires a client who is on SSI to actually either go down to their local Department of Social Services to fill out a Medicaid application or apply online via Virginia's Common Health Program. They are eligible for Medicaid. They just have to go ahead and fill out an application for it. So if you had a client, let's say you're a WISA, you have a client who's on SSI, you're doing the work world analysis, you ask them about Medicaid and they say, well, no, I'm not on Medicaid. You could actually use this chart to list some of the next steps that the client would need to take to apply for that Medicaid benefit if they were interested in it. So for example, you could put something like do some research on how to apply via Virginia's Common Health website, or you can give them the contact information for the local Department of Social Services if they want to fill out a paper application in person. And the next step would be you could put something like, make contact with your local social services office. Here's the contact information. You can list right there in next steps. So that's just kind of a practical way of using this chart to help a person determine what their next step is in terms of accessing some of those benefits they might be eligible for, but they're not using. And I don't see this on the chart, but work incentives. Utilizing work incentives is obviously a way to help a client maximize the income they have coming in terms of maybe increasing their benefit amount. So if you're a WISA and you know that the client in our case study is 18 years old, let's say he's a student, he's not utilizing the SCIE, but he could. One of the things that you could put on the form is utilizing the student earned income exclusion as an action step, and then you would put down the next steps the client would have to take in order to get there. So part of what the client could do to access that work incentive is getting a statement from their college or university or training program on letterhead about how many hours a week they attend that training program or that college class. You can use this to put the responsibility back on the client to help gather the information they need to gather in order to access that work incentive. So this is just kind of, like I said, a practical way to list some of the steps that the client would need to take to access some of the work incentives that they're eligible for. Okay. And that's it for the tools on this module. The next module, Module 4, is going to be on paying bills and other expenses. Whereas this module was on income tracking, the next module, Module 4, is going to be on expense tracking, and there's going to be some helpful tools in that module that I'll go through next time that a client can use to track how much money they have going out every month. Okay, so that's it for the Module 3 webinar. And because I'm not doing this live, I would normally pause for a Q&A section, question and answer session, but I do want to remind you that if you have any questions on any of the tools in this module, please don't hesitate to reach out. Michael, M-I-C-H-A-E-L .Klinger, K-L-I-N-G-E-R at dars.virginia.gov. You can call me, 434-298-7652. I would be glad to answer any questions you had on any of these modules. And I will be sending out some of the pre and post surveys, as I have for those of you that have attended the other webinars. We are required to gather this information as part of our partnership with the Consumer Financial Protection Bureau to do these trainings. So please do fill out the pre and post surveys when you receive them and send them back to me via email. Again, if you are a DARS counselor, even though this was not a live webinar, you're still taking the time to listen to it so you can get CRC credits. You can get an hour credit for this. And if you are a WISA, same thing, you can still log in an hour towards your continuing ed credits for listening to the archive. Again, I apologize for having to do the webinars this way, but I just don't want to take any chances of technical difficulties during a live webinar, and I want to keep us on schedule. I may just go ahead and do the next webinar on Module 4 in the same format. It seems to be easier than having to do it live and having to worry about technical problems. But that webinar was originally scheduled for March 28th. I will let you know ahead of time if I am going to go ahead and do it a little early. It'll depend on my internet connection during this next month. And if it is more stable, then I might go ahead and do the next webinar live. If not, I might pre-record it. But in any case, I want you guys to still be able to access the webinar and have the information. So I thank you for your participation in the webinar, for taking the time to listen to it. And please don't hesitate to get in touch with me if you have any questions. Thanks.